Hi, this is Zach Meir with the weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe. It is Sunday the 1st of September. Starting off with the FTSE, and here you can see that we just backed off from that late May resistance line there. 84.30 was the level we were trying to hit. We wanted an end of day close above that to take us up to the top of the rising trend channel from last September, as high as 86.30. On the downside, initial support 83.75, which was the mid-August resistance, and we've landed on that. Worst case, I suppose, is that we have to test the 50-day line, 82.30 at the moment, but looking as though we could still have a move on the upside to retest the best levels of the year towards 84.80 early in September, although September's not exactly famous for big rallies. Moving on to the DAX, and here you can see that it's been onwards and upwards, basically pushing through to the 19,000 level and beating the May peaks that we had. Top of the channel there from last October, heading for basically 20,000. We're looking for that by the end of this month, perhaps, while we remain above the broken May resistance line there at 18,600. It's a big ask, but maybe interest rates and non-farm payrolls will help the momentum there. Moving on to the Dow, and here we managed to sort of reverse the weakness of Thursday and end right on a high there, 41,500 plus. We've been looking for the top of that rising August 2023 trend channel, 42,700, and we're looking for that by the end of this month, hopefully much sooner than that. And we'd like to stay above that broken July resistance line, 40,800. That was the key to the latest break higher. Worst case here is that we have to test the top of that gap higher at 40,300 before we head higher, or maybe even the 50-day line. But looking pretty set fair. We're at the RSI not overbought yet, even though we are at the highs for that market. Moving on to Bitcoin, which has been a bit of a struggle to say the least, and continues to be a struggle. We're below that October rising trend line there, 58,800. There's a risk of rolling over down to the late February support line projection now at 51,000. And with the RSI now in the low 40s, it is looking as though there could be a problem here. We've got to break back above 59,000 to at least delay that potential breakdown. Then the resistance obviously back up at 65,000, but a messy picture there. And it's disappointing that we didn't go through to 70,000 on the late August move to the upside. Next up is position at gold, and here we've had a few mixed days, but here the look is that we might have to break that 2520 area, which was the initial August resistance, and head back down towards 2480 or so, which was the previous resistance to that. Worst case at the moment is we've got to go down to 2460 and the 50-day moving average and the floor of that rising trend channel from back in December. But bearish divergence, as was noted here before, and we don't want to see the RSI go back below 50, which compares to the 55 level we are at the moment. It's a little bit of a top beckoning there, or it looks as though we've got that. We've got to clear the 2460 area to give us a move up to 2650 by the end of this month as a best case scenario target. Bringing back the pound as well, pound dollar, and here we've had a stellar performance, but obviously as soon as we've looked at it, it's come back. And the initial support here, the old resistance there, 130.60, 130.50 rather, from back in July. So maybe that would be the earliest that people would be looking at that market as a long after the latest pullback. Moving on to the stocks, and starting off with Amigo, which it's always sort of a bonus to see it here, but what you can see at the moment is got this U-shaped bull flag breakout through 0.26. Above that, looking for a retest of up to 0.37, but obviously this is a company always on the edge, and certainly not for widows and orphans, but there has been a technical turnaround there. We haven't been above the 200-day line properly since the end of 2022, so this does look as though it is at least a technical recovery for the shares. On to Celadon, which I tweeted about quite happily during the week. Was expecting the shares to break that 37.75 pence level on an end of day close basis, and then go to fill the gap down there up to 52 pence over the near term. Maybe that'll happen sometime during September, but that pattern there, that U-shaped move does look very encouraging. It's a bit like the one we've just seen in Amigo. So let's see if Celadon can come up with the goods. DGI Innovate is next, and here always wary of placings for this company. I think we haven't had one for quite some time, but at least while we're above the rising 50-day moving average at 0.086, looking for the shares to retest the 200-day moving average at 0.126. Obviously, we're in a wide rising trend channel there from back at the end of last year. Top of the channel there, 0.22, but at this stage, obviously, it's rather difficult to see what would move the shares that much higher. Ideally, obviously, we stay above the uptrend line there from November, 0.08 in the meantime. Advancing senility made me forget to cover Echo Energy on Friday, but it's back here today. Here the picture, one of the shares trying to crawl along a rising trend channel base, for the channel there at 0.03 and looking for 0.003, and we're looking for the shares to head to the top of the range there, 0.005, maybe over the next 4 to 6 weeks. But I suppose if you're fussy, you'd be waiting for a break of the latest resistance around 0.037. And the other positive that I've forgotten there is that we've had a gap close by signal, so the Friday close well above the top of the gap there from back on Wednesday. Moving along to a stock which I managed to forget totally in terms of its latest recovery, and it is Europa Metals. The start of the rally here flagged by the rising 50-day line and also the gap close that we had there back on August the 14th. We've now progressed towards the top of that rising trend channel, rising triangle rather, at 2.5 pence, which is our initial target. If you're a fan of the shares and looking for greater glories, then that would be the upper parallel of that October resistance line projection. That's heading for 3.25 pence, which, given the current rate of progress, could be hit by the end of this month. Ideally, we stay above resistance on the way down at 1.8 pence, ahead of 3.25 pence or more by the end of September. Looking very encouraging on Firering at the moment. We've bounced off the rising 50-day line to end the week, and we're still looking for the top of that triangle there from February at around 4.4 pence. There is a barrier of the 200-day moving average at 3.7 pence, and we haven't been above that since the spring of last year, but it does look as though the shares are on their way, especially given the bear trap gap reversal that we had on the 12th of August, unfilled gap to the upside, and that gap has remained unfilled ever since. So that tends to be a sign that the bears have been caught out. On to GSTechnologies, which hasn't been in bull mode, well, I suppose properly since earlier this year, but we did have that full store in July. Having another go now with the shares closing on the 50-day line at 0.66, looking for an end-of-day close above the 50-day line to give us a move up to 0.95 in the top of that triangle there from back in June. Ideally, we stay above recent resistance at 0.62. In the meantime, after the, I suppose that's a sort of double bottom, triple bottom there around 0.56. Jaywing is next, and here, a big percentage move for the shares, gapping up there above a rising 50-day line. We also had a rebound above a rising 50-day line on the 15th of August, so double signal there, or maybe triple signal there. Looking for an end-of-day close above our initial target there at 2.9 pence to give us a move to 4.5 pence. By the end of this month. Once again, we haven't been above the 200-day line properly since the end of 2022, so a change there in technical terms. I did tentatively look at mobile streams a while back, thinking that they might have turned the corner, and as you can see, the first target hit there at 0.63, and looking for the second target there at around 0.09. Hopefully well before the end of this month. If you're a fan of the shares and looking for the next level, it would be the line I'm drawing there, the upper parallel towards 0.12. I suppose that could be the best case scenario target for the shares by the end of this month, but once again, one's always wary of placings on that particular stock. Ideally, we stay above resistance on the way down. 0.06 is the level. Onto one of the best stocks of August, which was Neo Energy. We had the bear trap gap reversal, getting the shares going, and I think we were looking at this from around the 0.5 pence level, maybe even a bit below that. Beautiful formation since then, with the mid-move consolidation breakout, then finding support at the old target there, the second target 1.2 pence. End of day close above 1.7 pence, and we could be looking for as high as 2.4 pence, which is a December resistance line projection as soon as the end of this month. Very pleased to see the shares bounce off 1.2 pence. The other point to note is both the 50 and 200 day lines are now rising. That means we're probably a week or two away from a golden cross, and the run up to a golden cross, as we are in at the moment, tends to be the strongest part of the cycle. So 2.4 pence, hopefully, for fans of Neo Energy. A stock which was requested after the dip and looks like it's going to deliver the goods again is Novacyt. We were looking for this, or looking at this, after the gap that we had on the 14th of August, and the shares certainly delivered. They nearly trebled after that. Current position is that we bounced off the 80 pence zone. We've broken a line of resistance there from last month around the 95 pence level, and closed above the top of the gap there at 94 pence, and basically that leaves us looking for a move to the top of that rising trend channel from July as high as £1.50 by the end of, we'll give it till the end of next month, and clearly we want to stay on the right side of the 80 pence area. In the meantime, you can see the 50 and 200 day lines have crossed, and that is also a positive, given that it is a golden cross for Novacyt. Onto Primoris, or Primoris if you want. Here we've got a gap through the 50-day line. Looks like we've bounced off the floor of a wide rising trend channel as well. All that's missing here now is basic clearance of the 3.6 pence area. We've got a rising 200-day line there as well. And above that, got potentially up to 7 pence. Difficult to see what would do that. I think they've made an investment in priority, which has obviously excited the market. And while we're above that 50-day moving average around 3.1 pence, looking for up to 7 pence by the end of October. Onto a stock which has served as well, Shield Therapeutics, and here we hit two targets so far. The second one was around 4.25 pence. Above that, we were looking for old, and we're still looking for old October, February support there, 5.75 pence, which hopefully will get by the next couple of weeks. Unfull gap to the upside above the 200-day line is fantastic, and obviously after that we can start dreaming of 7.5 pence and the initial 2024 resistance. But the upside here looks like it's valid while we're above 4.25 pence on Shield. Thought I'd revisit Thor Exploration's interview. The company is always an impressive person to interview, Shagan Lawson, and here we've got this little U-shaped bull flag breakout through 18 pence. I think they got a mention in the Daily Mail today as well, Mail on Sunday, looking for 22 pence, 23 pence, well before the end of this month. The unfull gap to the upside and the rising 50 and 200 day lines means that this stock really does look as though it is on its way, especially to retest last year's peak. On to the last two. The first one is Woodbois, where I've read on Twitter, which is obviously, or X as they call it these days, which is obviously the font of great wisdom, that the seller's out here, or potentially the seller's out. 0.4 pence, the breakout level there, and we closed above that on Friday. And basically looking for the 200-day moving average area at 0.63 pence. Might be a bit ambitious, but 0.5 first, and then up to 0.64, 0.63. Perhaps by the end of this month, if the seller's out. You can also see that we've got, or we've had, two good bounces off RSI 50 in the recent past, which is one of our favorite leading indicator signals on the upside. Finishing off with Zinnwald, where I've got a good feeling, apart from the stock, that the stock chart rather, that we're turning around. W-shaped reversal there through recent resistance around 8.6 pence. We've hit one of our old targets there at 9 pence, and above that looking for, quite logically, a retest of 12 pence over the course of September. Ideally, we stay above 8.5 pence in the meantime. That's it for me today. More updates tomorrow.